Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What's up, everybody? It's Friday morning. Welcome to the Friday morning edition of the Daily Market Commentary. You know, we had some interesting moves yesterday. We went up, we went down, we went all over the place, and we're going to take a look at some of those. And thank goodness for confirmation entries. So we're going to cover all of those. Click the subscribe button, hit the notification bell so you get the updates as they happen. If you are a regular viewer, do me a favor, click that like button. It helps a lot so the computers know that people are actually watching and paying attention. Doesn't take you any more than half a second. Do me a favor, click the button. All right, let's go. Let's roll. So the S&P this morning, we're down about 8 points. And yesterday's, we had a live trade room. So really quick, couple of things to talk about from yesterday. So we were in the live trade room yesterday at about 7-something in the morning, Central Time. And we were looking at this area right here. Now, when we were doing the live trade room yesterday, I really felt like we had a decent opportunity for price to come back up into here. And the reason that I was expecting price to come back up into here is because of this candle here. This candle is known as a speed candle. You'll hear me use the term speed candle a lot. And a speed candle tends to get retraced. So my overall feeling at some point in here was that we would eventually get back up to that region. So the trade that we put into place was called a candle-to-candle opportunity because there wasn't a great demand area to lean on. So when we first started the live trade room, we were looking at this particular spinning top candle, and we're looking to get long if price comes up above here. Now, in a candle-to-candle style, your stop would go just below this candle. So that one didn't happen, and then that candle printed. And so our next candle that printed was here. So when that happens, you change your entry to the high of this candle, and your stop would go below this candle's low, right? Now, in the next 15 minutes, so I'm going to just wrap my lines around this. I just want to break this down so everybody can kind of see how this works. The next candlestick that was created, if I go to a 15-minute chart, was we didn't come over that high until after we'd gotten below the low. So it didn't stop you out. Matter of fact, it allows you to enter the position. Now, when you enter that position, your stop is still the prior candle's low at 29.80, and it actually turned out to be a really strong move from 29.85 all the way up to 30.12. Now, why that number up there? Well, that number up there is the origin of a prior move down. So we had the opportunity for the candle-to-candle long, but then it turned into a short as it hit its long target and came right into the reversal area and gave a very strong move away. Matter of fact, all the way coming down to a confirmation entry for a long. Now, the confirmation entry for the long was a confirmation entry because this was the gap fill area from a couple of weeks before. And in that gap fill area from a couple of weeks before, we actually blew right through that level. Now, I turned it into a confirmation entry because the day before we had come pretty close to touching it and did not. So we had a confirmation entry. So this invalidates the level. So that level becomes invalidated. We then go to the next level below that. And now that is another little speed candle area. Price came into that level and we got a nice little 2-to-1 move away, but we were kind of basing in front of that level. And we came back down into it in the overnights. And that's where we are at this moment. So that's really the autopsy, if you will, of 4 different levels. And so now what I've got to do, I still think that this top one is the only one worth leaving on the chart. It just switches to a confirmation entry. So now what I have to do is take a look at where's my next potential trade. So when I go to the 4-hour, we technically have lower swing highs and lower swing lows. That was the reason we were okay getting short at this level here, was because coming into that level we had lower swing highs and lower swing lows. So I'm okay getting short in the right opportunity. So now I need to find if there's anything on a 15-minute chart to allow us to get back in. And really, I don't have great levels that say, hey, here's a good shot to get back in. There's really not a whole lot to lean on for today. You got to come all the way back to this area here, which is the origin of this last little thrust down in the Globex session. In reality, you might actually come up to here on a 15-minute chart. If we make it up to there today, it might make sense to look at a potential short coming up into there. Now, if we base in front of that level, it's going to weaken it extremely, but I'm not sure we're going to make it all that way up into there. That's 20 points away, right? That's a 20-point move from where we are right now. I'm not sure we're going to do that. So I also might look candle to candle on a short opportunity. If you get a reversal candlestick pattern, look for a candle to candle short opportunity. Now, by the way, we had, for those of you that were in the live trade room yesterday, we had a pretty good day. If you caught that little move and then the one back down, there's nothing that says you have to trade today. Remember, it is a Friday, and holding things over a weekend certainly exposes you to a little bit more risk. So just keep that in mind as well. NASDAQ level. So in the NASDAQ, very similar price actions. We had that candle-to-candle opportunity. Now, in the NASDAQ, we actually went through the first level that we identified for what would be a small stop out. But then we came to our second level and gave it a strong touch and go. Now, interestingly enough, the NASDAQ second level hit at the exact same time that the S&P level hit as well. So this one had a small stop out relative to reward, but the next level worked extremely well. Came into the next 15-minute area, and then going to our 15-minute level here, touched it. 1, 2, 3, 4, 5. After 6 candles, we had done nothing. So essentially, your stop should be moved to break even. Now, when I look at the 15-minute level on this one, I actually like this for a potential reversal better than I like the S&Ps. So if you want to get in fairly quickly, I think this one gives you a slightly better opportunity to re-engage. All right, next, let's take a look at crude oil. Now, crude oil, we had 2 levels yesterday, and in those 2 crude oil levels, one of the things that came up was that we blew right through that first level. We blew right through that first area. Well, that was a confirmation level. And then in blowing through that first level, now, if I go to the 4-hour, we've got lower swing lows and lower swing highs. Now, we did come into what I thought would be a pretty good area of demand, but by definition, our trend had changed, which weakens this level a lot. Now, we came into it with a lot of momentum, so we would anticipate that this would be a really good reversal opportunity. It unfortunately was not. This level, which I thought would be a pretty good level, got stopped out almost immediately, and so that one goes for a small loss if you jumped in on that one. Now, a lot of people may not have because they didn't feel like going against that big picture trend direction change, and that's exactly what happens with big picture trend direction changes. So now I need to look at this area up here where we have the origin of this move down. Now, this is a pretty wide zone. So this level might be a bit too wide for your likings. If it is, go down to either a micro contract or use the options, or maybe even USO, the ETF, because that level might be a bit wide for your choices. But this looks a lot like what we saw yesterday, right? You can theoretically look at just this wick over wick portion. I'd be okay if you just use this wick over wick portion, which is a bit smaller, but in reality, this level is pretty wide overall. Next, gold. Gold is another one. We had a confirmation short on gold, and price just blew right through that level. So price swung right through that area, so we need to remove that level now. However, I like this area here that was kind of left in its wake. Now, in this one, this looks a lot like the oil level, just the opposite. I'm just going to do the wick over wick portion on this one, as I think that's probably the better setup. Is that little small wick over wick level in gold. All right, moving on to our bonds and currencies. So our bond market, we finally got a huge rally into our supply level. But look at what happened just in front of that supply level. A little bit of base, a little bit of base. And so the basing just in front of the level actually says that this level would lose its validity, right? Remember that the kiss of death is basing in front of a level. I can't say that. I can't stress that enough. Now, we had speed candle, base, speed candle. I would, however, now use that area as a very high quality demand zone. So if price comes back into that demand area. Now, this was a breakout area that we had talked about, and unfortunately, we didn't get basing in front of this breakout area. So when I go to the 4-hour, this is the first move we've had out of this long-term sideways price action in bonds in quite a while. Now I can look to more to be a buyer on a pullback. Next is the Aussie. So the Aussie got a little bit of a breakdown from this area right in here. It was a very strong breakdown on our late morning moves, and so Aussie really fell hard on dollar strength. If you missed that breakdown, which I could see why you did, if you didn't catch that one, there wasn't any basing before the level, which would make that a little bit more hairy, a little bit more precarious to get into. You may get a reversal back up into this region right in here, which occurred right at the European market open. In the euro, we are coming close to our potential euro short, so let's let that kind of continue to play out. This was a speed candle move down, and it's rallying back up into this level. So let's see what that level looks like later today. Remember, you got to at least have a 2-to-1 reward to risk ratio before that zone. And then in the Canadian dollar, we actually traded right into that level and then moved away a little bit more than a 2-to-1. And now we're kind of continuing to move that one down. So if you got into this Canadian dollar level from yesterday's live trade room, take your stop, move it down to break even, and that one is all used up from this point forward. As far as adding anything to the chart, I don't really want to add anything to the chart. There's nothing on here that I like that's worth adding to our position. Let's take a look real quick at the Great British Pound and Japanese Yen. And in the Great British Pound, yen was just gangbusters, went straight up, huge move, and then went right through our confirmation entry, and then came into our 15-minute level and just kind of chopped around in there a little bit and then popped through that. So the yen blew through the confirmation. Well, thank goodness for confirmation entries. And then we had a break above our long breakout. So once again, very much like the Aussie, you may or may not have taken that long breakout as there was that piece in between. But what it does now do is set up a really solid demand area here right in that zone. And then as far as the Great British Pound goes, we had another little level up in here. Price came into the level 1, 2, 3, 4, 5, 6. So at that point, you take your stop, move it to break even. You may or may not have been stopped out at break even on this position. If you held on and just moved your stop to break even, you're still in it with a little bit of a gain. I would at the very least move my stop to above this candle now to lock in a bit of profit. So that's what we had going on yesterday. Yesterday was a very busy day. I know today's video was a little longer than most, but I at least wanted to spend the time to break down what were some of the things that we were looking at in these markets. So if you have any questions, please send us an email, support@tradersarmy.com. Remember, if you hold something over a weekend, you take a bit more risk, so just be aware of that. And so hedge that risk accordingly. I will see you Sunday night in our live trade room. Thanks so much.